Hey, you can borrow money and have no payments. Hi, Paul Mauro, Smart Financial. I just want to update you on all of the newest things that are going on in the reverse mortgage business. I have some personal experience with this in our practice over the last 50 years. For people to access money from their home, normally they think of an equity line. They get an equity line, then they start writing checks every month and it aggravates them and they pay it off. First and foremost, talk to your children. Whenever you're talking about anything that looks like a mortgage on your home late in life, you might actually have kids in your family who want to move into your house. I will tell you that is rare. Like 97% of all of the families that we work with in 52 years, the kids sold the house. In fact, it's one of the first phone calls. They're out in California, they're in England, and as much as your home in Shrewsbury might be beautiful, they're probably going to have their own life in New York City. So talk to your children, number one. And then if in fact they don't want your home, you should consider your home just another asset. It's a different asset than stocks. It's a different asset from bonds, right? And normally people think that if the house isn't paid for when they die, they're not going to go to heaven. But you know what? It doesn't make any difference if you happen to die and have a mortgage on the house. If you've used that money to enhance the net worth and the wealth of your children. So here's my thing. In my book on smart financial grandparenting, the first book I wrote, we talked about how you can get college at half off for your kids. It's chapter 1 of my book. It's one of the most important pressing issues of parenting. If you can get college tuitions at a serious discount, which includes, i.e., not paying income taxes on the money first, wow, that's a huge break. Let me just give you an example. If a college student today who happens to be a granddaughter of yours from Shrewsbury or Westboro, and she's going to go to college, imagine if $250,000 of college costs means you have to go out and earn $400,000, pay taxes, and then pay the college bills. If you can access that $250,000 from your home to help your granddaughter get educated, that's a huge win. Okay, for everybody in the family, you save $150,000 taxes. That's just one thing. Second thing is, long-term care planning is really serious. I had 2 parents in long-term care, and those things weren't cheap. But imagine for this, you can use equity in your home to buy one of these triple duty long-term care certificates. So you can borrow $100,000 and get $300,000 of long-term care. Let me say that again. For every $100,000, you can get $300,000 of long-term care. Now, doesn't go a long way, I will tell you, when you start doing long-term care planning and nursing care planning and aging planning. That's right out of my second book, which is Smart Longevity. If you don't plan for it, your kids might end up paying for it. So let's get our act together on this. If you have equity in the home and they're not going to move into it, use it for educating your grandkids, use it for paying off long-term care. And then the big one is if you've got an IRA and you're going to leave that IRA to your children, you're leaving them your tax bill. I talked to my son. He lives in New York City. He's a young guy. He just finished graduate school at Georgetown. He and his buddies are working. They're shocked that they're in about a 50% tax bracket because it's state, federal, and city tax. He doesn't want my tax bill. If I leave him $1 million IRA, he's going to pay $500,000. So do this instead. Use your reverse mortgage money to pay off the mortgage on your IRA and leave your children tax-free Roth dollars. Now, if you want to find out more about this, subscribe to the channel, follow us on YouTube. Make sure you jump on my podcast program, which comes out on Mondays when I talk to Dave from Mutual of Omaha. And I'll see you again next time on Smart Financial. Staying on top of smart ways to use the equity in your home, that's just part of the art of being smart.